Good afternoon, dear audience. My name is Alexey. I will tell you how to plot horizontal support and resistance levels. Apart from this, we will analyze with you for what reason they are invented and how to determine and apply them in our trading. First, it is worth noting that horizontal support and resistance levels work on all time frames without exception. Therefore, such an approach to trading will be useful both for those traders who open positions within the day, that is, for those who trade short-term, and for those who are ready to hold positions for several weeks, in other words, who trades medium-term. It's necessary to start plotting levels beginning from large time frames, and gradually go down up to the time frame on which you want to trade. Why is it necessary to act in this way? First of all, I recommend that you start analyzing markets from the daily time frame. Since daily is the most reliable time frame and it is used by all the largest market participants without exception. There are banks, investment funds, that is, the market participants that are capable of influencing shift in demand and supply in the financial market and thereby move the price either in one direction or in another. These market participants trade daily time frame, as they cannot, like any other private trader, in one click open a position of the required volume. They accumulate their position for a long time to get the best prices when entering the market. The same applies to the exit from the market when positions can be closed within several days. This often occurs around the key levels of the daily time frame. Therefore, the most reliable signals are formed on daily, and it's important to understand in what state the market is on this time frame. If you are trading daily time frame, then plotting levels on this time frame is important for further market marking understanding and the price movement potential in one direction or in another. If you are trading on a smaller time frame, for example, on 1 hour time frame, then it is important for you to understand, first of all, in what direction the largest traders tend to trade as the daily trend evolves. Afterward, it will be necessary to switch to the 1 hour time frame and start plotting levels in the same way. And starting from this, seek for entry points on this time frame, either bullish or bearish. The signal quality on the smaller time frame in the direction of the main trend, i.e. trend on the daily time frame, will be much higher, and in this case you will have the opportunity to get an excellent risk-reward ratio. It will give you a chance to look for those market entry points in which the risk will be much less than the possible profit potential that you may obtain in this position. Levels are often formed by 3-6 candles. At the same time, if you see a reversal formation on the market where 4 candles participate, i.e. too bullish, then too bearish, or too bearish and too bullish, then this is definitely the resistance or support level. A very important aspect of the levels formation is whether you can see the level visually or not, i.e. if you suppose that at a point there is a market reversal from the bottom up or from the top down, then the probability of its existence is about 18–19%. There are situations in which levels are formed just for 3 candles. For example, if there is a bullish movement on the market which ends with the shaping of a large bear candle that overlaps several previous ones, this may indicate that a level has been formed at this point. There are patterns that are more complex when levels are formed by 5, 6, and sometimes even by 10 candles, among which there are dodgy bull and bear candles alternation or price gaps. However, all this doesn't matter if at first you see the price reversal visually and if more than 3 candles take part in this reversal. Let's take an example: Forex, Euro-Australian dollar. How to determine where is the nearest resistance level? The current price is 1.4092. The nearest resistance level was formed in candles from March 24, 27 and March 28. i.e. the market was rising during 5 days and after that there was a buy candle overlap that caused the level formation for 3 candles. Let's determine the upper border of the resistance level along the shadow of the bull candle that is involved in the reversal. The price is 1.4313. Let's emphasize the lower border of this level. It's plotted according to candles borders in this reversal. The price is 1.4257. You see that this level has a rather wide price zone, approximately 55 points, that is normal for the daily time frame. For easy further perception of this level, I recommend that you paint out it with a color. We can use the rectangle as a graphic figure for painting out this level, a piece of work we have just fulfilled by plotting the resistance level. Now our task is to plot a similar support level. We also look at where it is relative to the current price, get down below, literally at 4 candles, and see that the market's upward reversal occurred in the candles on March 17th, 20th and 21st. i.e. after the last candle's closing the market reversal was formed. There was a declining movement, which came to the end with active rising. Similarly, we are plotting the borders of this level. 1.3874 the border along the shadow, 1.3887 is the border along the borders of the candles, and paint out this level by a color rectangle. So we have plotted 2 levels, the nearest resistance and support levels. The support level is the level of the first type, where there are 2 bearish and 2 bullish candles. The resistance level is more complicated, but here we can visually see the market reversal. There is a bullish movement that was overlapped by 2 candles. Now, for example, we will plot support and resistance levels on another financial instrument. Let it be a pound-dollar currency pair. By analogy with the euro-Australian dollar pair, we switch to the daily time frame. The current price of the pound versus the dollar is 1.2439, and our main task is to plot the next levels. Let's start with the resistance level. We look where is the visually located nearest price reversal from the top to bottom. These are candles which were formed on 27th and 28th of March. Here, after the bullish movement, which included several large bull candles, there was an aggressive bearish candle. Hence, the resistance level is formed here, not the simplest but visually well defined. The upper border of this level is determined by the shadow of a bull candle, which is involved in the reversal. This is the price of 1.2614. The lower border of this level is plotted on the borders of candles. The price is 1.2556. Here we will paint out this level in a certain color so that we can clearly see it in the future. Now we will do the same with the support level. I think there is no doubt where it is. The lower border of the support level is 1.2107. The upper border is 1.2152. How do we determine that the level is exactly in this point? There was a downward movement, then the market began to rise rapidly, and after that it was strengthening for a long time. Therefore, here we see the market reversal from the bottom up. We have plotted 2 nearest support resistance levels on 2 financial instruments. For what? To subsequently use the basic properties of horizontal levels in trading. How to do it correctly we will analyze in the following videos.